Hi, my name is Bob Kendall. You know me from the Kendall Report. I help you manage your portfolios and protect your wealth. The way that I do that is through our software platform, Portfolio Expert. This platform is amazing. It covers over 16,400 symbols. You can build as many portfolios as you want to manage and to protect your wealth. What you'll find by setting up a trial of our software is that we're going to train and walk you through every step to become what we refer to as an ETF hacker. We're going to show you how to take your favorite ETF and make it something really special, and it's owned by you. We also call this building your own personal funds. And what that means is you're going to build your own personal mutual fund. It is all yours. You can pick the stocks, and the software will walk you from A to Z, telling you when to buy and sell, how much to buy and sell, including helping you to protect your capital through the signals that when the market rolls over will get you to cash and out of harm's way. It's very simple from here. It's just sign up, click the link down below. We'll get you in our system. As soon as you get in there, we will notify you of a live webinar to walk you through every step so you understand exactly how to use this product and how to manage your portfolios and protect your wealth. Sign up now, just click the link below. As we look back on yesterday, we did see a very strong NASDAQ. When I did my analysis last night, I could see that it was going to surge up to the levels that I talked about, basically satisfied everything that I was looking for. Meanwhile, the Russell and other markets suffered. The Russell was down 1.7%, the S&P was down 0.2%, and the NASDAQ down 0.1%, but the Russell got hit hard. Not only did the Russell get hit hard, energy, financials, and basically everything that has been working really well backtraced yesterday, and that had a lot to do with Boeing, as Boeing got knocked down pretty hard, about 4% yesterday. So we're basically seeing a bit of a rotation back. The tech stocks are trying to climb back in and get that leadership back, which there was a pretty substantial move on the spreads that I've been talking about with long the Russell, short the NASDAQ. I'm not going to go through that tonight. In fact, I'm going to keep tonight's video pretty brief since we have a 3-hour live stream coming up at 1:30 New York time tomorrow. So I'll go through a lot of details then, as I always do, and I'll be able to go into a deep dive on a lot of issues, and especially some of the inflation issues. The one thing I do want to discuss before the live stream comes on tomorrow is the Fed and what the expectations are. Now, it's universal across the street that everyone expects the Fed's going to be dovish. That's just the expectation. It has been for a while. And what we're seeing, though, with the 10-year printing up at that 1.62 level, this puts a lot of pressure on the Fed to address this issue, or at least try to debunk the inflationary fears, because if they don't, we might see more of a surge to the upside. I will cover the 10-year in detail tomorrow, but I'll make a quick comment that it does look like we're going to move potentially toward that 1.72, 1.76 level, which would be a new high in the pattern. The critical level in the 10-year is down at 1.59. If we broke below that level, that would suggest that we're going to get a little reprieve from these higher rates. The probabilities are pretty low, and once again, I'll cover this in the live stream tomorrow. As we come into today, it's going to be all about the Fed. In fact, overnight, markets are extremely quiet in anticipation of the announcement from the Fed's two-day meeting. So I don't expect to see much overnight. So what I'm going to do here is I'll cover our database output, which was very benign to say the least. There's really no activity anywhere that's coming out of these markets. The one mention I will make is that we're starting to see some of the technicals and some of the momentum trying to emerge, but it is at a very critical level, and I'll mention that in the technical section here in just a minute. To summarize, as we come into the opening in the morning, we're likely to see a little bit of a bid and stability as we come into the pre-Fed meeting. It just appears that we're going to see a stable market. The downside is very limited. There's very little to talk about on the video tonight. So I'll go through everything in the live stream tomorrow. Let's take a brief look at the charts and set up some of the market grid and some of the things you're going to need on the open in the morning. As we review the WaveTech database, as I mentioned in the opening comments, there's very little going on. There was 231 buy signals, about 320 sell signals, a slight negative rotation, but nothing material here. We continue to hang around the 30% level, 30.10 on a bullish basis. The concern that I have here on the database is that it could stall and we could go back down to test that 22% level, but we're just not seeing a lot of participation in symbols. So when I talk about the low momentum, the lack of participation in the short-term models, it doesn't mean that the market's necessarily going to roll over, but it just means that the breadth is extremely narrow, which typically does suggest that the markets are vulnerable to the downside. Now, we've seen new highs over the last several days in some of the indices. The NASDAQ has been lagging until yesterday's action. We finally saw it wake up. As I review the S&P futures, what you're going to see here is that the market continues to kind of do a soft roll here. Now, PPM1 has ticked up to a plus 0.38, which is in trend mode, so that's very positive that that's happened. PPM2 and 3 remained somewhat neutral, but in spite of this pop-up in the PPM1, all this suggests is that there's very strong support at the 38.96 level. There's not a lot of vulnerability below that 3900 level, and this is moving up about 15 handles per day. So in just a few days, we'll be printing 3920, 3930 level. So there's going to be substantial support. Now, there's still, as I mentioned in the opening comments, looks like we're going to move higher. As I review the SPX, we did see an uptick in the PPM yesterday up to 0.24, which is right at trend level. This will continue to uptick today when the markets open. As long as we remain above the STX number 3928, we're going to be okay. And my expectation for this market would be an S1, possibility of an R2. I've been talking about this 3980, 3989 level. We get any above that, then we're going to print right toward that 4009 level on the RTX number. So we're definitely trying to push toward that 4,000 level. And just as I mentioned in the futures, there's very little downside. The next market that I'll cover is the NASDAQ. It is down 12 handles right now at 13,129. As I discussed in last night's video, I thought we would trade at least up to an R2 number, which was the 13,227. We managed to make it up to 13,287, just below the R3 number at 13,311. Now, that's also traded just above the 40-day moving average at 1321. And the way this pattern is setting up now, we're seeing this market making a turn. There's a possibility that we've got a decent bottom forming here and that we're going to start a move toward the highs. And as I mentioned briefly in the opening comments, that it looks like the tech stocks trying to claw back their leadership again, and we could see them lead for several days as we go forward. As I look at the market grid for today, we're likely to see a minimum of the 13,203 with the possibilities of going to R2, 13,273. R3 would be possible. That would push us back above the 40-day moving average. There will be a fair amount of resistance at that level at the 13,225, which is basically an R2 hit. On the downside, S1 should hold. The final market that I will cover tonight is gold. As we look at the daily gold chart, I've been talking about the 21-day moving average being pretty substantial resistance. That continues to be the key number at 1838. PPM1, however, has cut through its first and second derivative, which suggests there's about a 60% probability to move above that 1838 level and start to move toward the 40-day moving average, which is 1860. I'll go through a lot of detail on the live stream on Wednesday and what I think the expectations are on intermediate and longer term basis for all of the metals. Thanks for watching. We'll see you tomorrow on the live stream. Hey everyone, thanks for watching. If you enjoyed the content, make sure you subscribe, hit the like button, and hit that notification bell so you'll know when I post my next videos and when I do my live streams. Thanks again for watching.